Hi, this is David Kern with Wealthquest. Today we're going to be talking about how to determine how much life insurance you might need. So with life insurance, what we're trying to accomplish is to minimize the financial impact that would be left on your loved ones if something were to happen to you. Without life insurance, the entire financial burden falls on those who survive you. And for some, that's a cost that they're willing and able to absorb because they're self-insured. And when I say self-insured, I mean, they've saved significant assets to be able to provide for themselves. Maybe there's another income stream or two that will help them maintain their standard of living if that death event happens. But for those who aren't self-insured, that event can be catastrophic financially, and it can last for decades to come. So what life insurance allows you to do is to transfer that cost or that risk to an institution, a life insurance company. And in return, they ask you to pay them a small fee in the form of a premium. And then if a death event happens down the road and you have that life insurance policy, then they will give your survivors a sum of money, the beneficiaries a sum of money to help provide relief on the financial front. So then the question arises, how much life insurance should you get? Now, there's no substitute for a comprehensive financial plan helping you to navigate and address the need for life insurance, but there are some rules of thumb out there that are helpful to know. One that I've used in the past and that I like because it's easy to remember is the acronym DIME, D-I-M-E. The D in that acronym stands for death expenses. So how much would we expect for burial and death expenses to be? Maybe around 10 to 15,000. The I stands for income replacement. So we want to multiply your income by 10, and that's the number that we would put in for I. M stands for mortgage. So do you have a mortgage? You put that number in for M. And then E stands for education expenses that you might expect down the road. So if you have children or plan on having children that you want to help pay for their college, you need to figure out that expected cost and put that in there. When you add up all the number values for each letter, you'll get an overall number. Maybe it's $2 million. The next step is to figure out how many assets you have. How much have you saved in assets? And if the answer to that question is you have $3 million in assets, and your life insurance need is $2 million, then at that point you're probably self-insured. You have enough assets to be self-insured. However, if you have a need for $2 million in life insurance, but you have $100,000 in assets that you've accumulated, then there is a life insurance need that you need to address. So there are some things to consider. That acronym DIME gives you a baseline amount for the amount of life insurance that you'll need, but some other things to consider are what type of insurance you should get. So there are what are called term policies and permanent policies on the life insurance side. Here at Wealthquest, we're huge fans of term insurance for a majority of our clients, while at the same time we recognize that permanent insurance do need to be had on occasion. And so you need to flesh that out for yourself. What is the right fit? What type of insurance? Not all insurance is created equal. So do you need term insurance or permanent insurance? The other thing that you need to consider is that life insurance is generally cheaper the younger that you are, especially from a term perspective. So it makes sense to get life insurance when you're younger because you're able to lock in lower premiums. And the third thing you need to consider is that depending on your life stage, you may want to get more life insurance than what you calculate going through an exercise like I explained with DIME. If you're younger and you're married but you don't have a family and you're early on in your career, locking in a life insurance amount at that life stage is certainly not a bad thing, but you also may have aspirations for a larger family someday, and you might expect your income to go up down the road. And so it could make sense, since you're younger and since you expect your life stage to change, to go ahead and get more life insurance than what you actually need. And then the alternative to that, of course, is as your life changes and you go through those different life stages, you could always acquire additional life insurance to protect your family. So I hope that was helpful. Of course, if you have any questions about how much life insurance or what type of life insurance you should think about getting for you and your family, please contact us. Hope you have a great weekend.